Welcome to the next Brahmastra Revision session of CA Final Audit. So we are in chapter 2 now, chapter 2 essays. I hope that you are following the series of revision videos that we are uploading and you are going in that sequence. So we are in the sequence of chapter 2 essays now at CA Final level. When we talk about chapter 2, the essays that are covered in chapter 2 are essay 240, essay 250, 260, 299 and essay 402. All right, all very sensitive essays. Okay, and we can see lots of practical questions over here from these standards. Now the very first essay that is covered is essay 240, and essay 240 title at least everyone is aware of, because it was there at interest level also, maybe for you. So auditor's responsibilities in relation to fraud in an audit of financial statements. See, this is not something new for you. You know that preparation and presentation of financial statement is the responsibility of management. You also know that prevention and detection of fraud and error is also the primary responsibility of the management. Auditor's main duty is to express an opinion on the financial statement. Auditor is not here to detect fraud. However, if auditor finds something suspicious, then in that case he should investigate further. Auditor is expected to maintain an attitude of professional skepticism, questioning mind. Now these things you are learning since inter-CA level. Alright. So first two basic points I have printed over here. The primary responsibility for prevention and detection of fraud is of both management and those charged with governance. And boss, even though auditor tries his level best, he may fail to detect some fraud misstatements because auditing suffers from inherent limitations, and hence there is an unavoidable risk that auditor may fail to detect some material misstatements. So these two lines you should never forget, whenever people talk about auditor's responsibilities in relation to fraud. We know that auditor's main duty is not to detect fraud, his main duty is to express an opinion. Now, what kind of questions can be asked, when it comes to examination? I'm expecting a proper practical question. And if you look at the content of essay 240, then it gets divided into broadly these 6 points. So these 6 points, hardcore proper points from essay 240 from which they can ask questions. And then apart from these 6 points, there is also one more 7th point. It is not a part of essay 240, but you know that there is a duty to report fraud under Companies Act 2013. There is also duty to report fraud in clause 11 of CARO 2020. So that also they can question over here. Okay, so very first point, meaning of fraud and auditor's concern. Array boss, everyone understands that fraud is an intentional act which involves the use of deception to obtain unjust or illegal advantage. It's an illegal act to get illegal advantage, all right, by cheating someone, use of deception. Now let me be very clear. There are lots of types of fraud, but auditor is not concerned with every single type of fraud. Please understand. Let us say that if there is an employee of the company and he has sold the customer database to the competitor, auditor will never be able to reach this fraud because the financial effect of this fraud will not be reflected in the financial statements. Misappropriation of inventory, misappropriation of cash, overvaluation, undervaluation, omission, wrong recording of the transaction. Now these are some frauds where auditor can reach to this fraud, although not the main objective, but at least auditor may be able to reach this fraud. Please understand that auditor is concerned with fraud that causes material misstatement in the financial statements. Please let me tell you, auditor is not concerned with all types of fraud. He is concerned with fraud that causes a material misstatement in the financial statements. Therefore, there are two types of fraud that auditor is concerned with. One is fraudulent financial reporting, that is manipulation of the financial statements, which is at the management level. And second is misappropriation of assets, which is at the employee level. Now, in the module, Final CA module, they have explained fraudulent financial reporting and misappropriation of assets. Now, if you are the management and if you want to manipulate the financial statements, then what are the techniques that you are going to use? Come on, man. What kind of techniques management uses normally? Omission, then adjusting the assumptions, fake entries, altering the records. All right. So look at this. Techniques used by management to override the controls. I repeat, techniques used by management to override the controls. That means the techniques used by management to commit fraud in the financial statements. The code word is complex FERA. Okay. So look at this. Management intentionally tries to increase the complexity of transactions so that auditor is not able to find this. F for fictitious entries. E for estimates, manipulating the estimates. R for recognition, trying to recognize things in advance or trying to delay the recognition or trying to omit the recognition. And A for alteration of records, that is complex failure. Now, what is misappropriation of assets? Defalcation of cash, defalcation of inventory, misappropriation of inventory, right? That is misappropriation of assets. Now, normally employees do it, all right? So, it is achieved by the employees. How employee will achieve that? Okay, now look at this. Either employees will, if you are the cashier, then whatever receipts you are getting, you will embezzle that. Means misappropriate that, steal that. So, embezzlement of receipts. Then actually stealing physical assets. Okay, come on man, in articleship you may have done one or two such frauds. Then using assets for personal use, and then submitting fake bills and getting those bills cleared, causing an entity to pay for services not availed or goods not consumed. So it is very simple. Misappropriation of assets is achieved by employees through what? Through embezzlement, stealing, personal use of assets, and causing an entity to pay for services not availed. One more time. Embezzlement, stealing, using assets for personal use and causing an entity to pay for goods and services which are not received. All right. That is misappropriation of assets. That is how it is achieved. And let me tell you what, we are an auditor of financial statements. We are not forensic auditor. So even though if we are able to find the fraud, we are never in a position to find out the proper legal evidence of who committed the fraud and stuff. So auditor does not make legal determination of whether a fraud exists or not. That is never expected from the auditor of financial statements. That is meaning of fraud and auditor's concern. I hope you are clear with that. Okay. Now, second point. Extremely sensitive. In fact, in the new syllabus module, what we see is that the case studies, the questions are from this particular concept. Fraud risk factors. Fraud risk factors. Why a person commits fraud? Why a person commits fraud? Either there has to be some kind of incentive, right? Some kind of greed, okay? Incentive. Or there has to be some kind of pressure on a person to commit fraud. But the person should also get some kind of opportunity. If you don't get the chance to commit fraud, no matter whatever is the incentive or pressure, how will you commit a fraud? Then you should have the right attitude to do the wrong things. So you also need some kind of convincing of your own mind, attitude or rationalization. Only then you can commit a fraud. So one more time, what are the fraud risk factors? IPO's attitude. Incentive, pressure, opportunity, attitude, rationalization. One more time. Attitude, rationalization, one and the same. Incentive, pressure, opportunity, attitude. Come on, tell me. Incentive, pressure, opportunity, attitude. Now, why it is one of their favorite in exams? Please understand that auditor is worried about two types of fraud. One is fraudulent financial reporting. Second one is misappropriation of assets. One is fraudulent financial reporting. Second one is misappropriation of assets. One is management level fraud. Second one is employee level fraud. Correct. Now, how many questions they can ask in exams? 1, 2, 3, 4, 5, 6, and then a general overall question on fraud risk factors. Now, why it is one of their favorite in exams? So, let us play this game. I am going to give you one practical factor, and then you will decide that it will fit into 1, 2, 3, 4, 5 or 6. Alright, you will have to tell me the box number. Alright, the right combination. So, let us say, yeah, weak laws, weak laws created by the government, weak laws. The laws are not that strict. They are weak laws. Then in that case, it is an opportunity to the management to manipulate the financial statements. Weak laws. Estimates, assumptions, estimates. It is an opportunity with the management to commit a fraud. Alright. So weak laws is an opportunity to the management. Then estimates, assumptions, judgments is an opportunity for the management. Then let us say weak internal controls. If the internal controls are weak, then it is an opportunity for the employees. Alright. Or let us say investors have high expectations of high returns. Investor expectation becomes some kind of pressure. Investor expectation becomes some kind of pressure. All right. Let us say that there is a known history of violation of laws and regulation. That means management keeps on violating laws and regulation. If there is a known history of violation of laws and regulations, then it is an attitude which shows that management may commit a fraud in the financial statements. Please understand one thing. Similarly, they can ask you lots of questions. And that is the reason that and this can be very sensitive for your MCQ. That is the reason that I have given the module page number, point number reference as per the new syllabus module, and you will have to read this from there. If you are my students, still open a module once just for your satisfaction. All right, please ensure that you are reading it from there. All right, because this is going to be very sensitive for your MCQs and case study based. I cannot go into further details now. I've just told you how to think over here, so you can go through the examples. If there are any doubts, you can let me know. All right, for fraud risk factors. Now, as an auditor in SA 240, what is your responsibility? First, to perform risk assessment procedures and find out whether there is any risk of material misstatement due to fraud in the financial statements. See, please understand, I am not going to act like James Bond and start investigating fraud over here. First, I will perform risk assessment procedure and try to find out whether there is a risk of material misstatement due to fraud in the financial statements. If there is such risk, then I will perform further audit procedures. Please understand the logical sequencing. So first risk assessment procedure and then further audit procedures. Now in the module, they have not given you risk assessment procedures in great details. That is why I have given it in short over here also. All right. So maintain an attitude of professional skepticism. That is very basic point. No need to by heart. All right. Then sit with your audit team, discuss what kind of misstatements can occur, where fraud can take place. Like in a construction industry, you can always discuss that there can be a fraud due to revenue recognition in the financial statements. All right. Then ask questions to Moti. Who is Moti now? Management, others within the entity, those charged with governance, internal auditor. Ask them the questions and try to find out whether there is any risk of material misstatement due to fraud. Try to evaluate some unexpected relationships. What is unexpected relationship? For example, let us say if the profits are declining and the managerial remuneration is increasing, then this is unexpected relationship, boss. All right, something like that. And then in various essays, we keep on performing risk assessment procedures like understanding the entity, evaluating their systems. Please consider the results of those risk assessment procedures and find out whether there is any fraud risk factor present over there. All right. So this is your risk assessment procedure. But listen to me very carefully. I am going to now give you a very, very important point. All right. When you are performing risk assessment procedure, means you are just trying to identify the risk of material misstatement due to fraud. Now when you are performing risk assessment procedure, it is compulsory that in this particular essay they have written this, and there was a very big question in one of the old course RTPs on this, that you have to presume, means you have to just presume that there is a risk of fraud in revenue recognition. You have to just presume that there is a risk of fraud in revenue recognition. That means you please start with this thinking that, boss, in this entity, when it comes to revenue recognition, there is a possibility of risk of fraud. Normally, as an auditor, we work based upon facts and not presumptions. But in this essay, they have asked you to presume that there is a risk of fraud due to revenue recognition. However, let us say if you are conducting audit of a very simple entity with a very simple revenue recognition, for example, there is only one revenue that the entity has, that is also only rental income from one property. Okay? So if auditor believes that there is no risk of fraud in revenue recognition, due to the nature of the revenue, the type of the revenue and stuff. Then auditor shall document the reasons for the same in his working papers. I repeat, if auditor believes that there is no risk of fraud in revenue recognition, then auditor shall document the reasons for the same in his working papers. You don't have to write it somewhere in the audit report. You just have to document the reasons for the same in your working papers. The logic being that revenue is a very sensitive item, so institute wants you to be more alert. So they are allowing you that yes, you can think otherwise, but then you will have to document the reasons for the same in your working papers, so that by no means you miss out on looking at revenue. All right. Okay. So that is the risk assessment procedure. Now, as an auditor, and when you are a student of finance, you know that first we perform risk assessment procedure, then we perform further audit procedures. In further audit procedures, we talk about test of controls, test of details and stuff, right? The checking part. Now, in the content of further audit procedures, it is broadly divided into 4 parts, as you can see over here. First is, when you look at this line, you feel it is very technical, but it's very easy, don't worry. Overall responses at FS level. Alright, first let me talk about that. What is this overall responses at FS level? Let me tell you that, let us say if you're conducting audit of X Limited and you came to know that X Limited is going to apply for IPO in this year. It is going to go for initial public offer in this year. That means that there is a risk of overvaluation. There is a risk of overvaluation in the entire financial statements. Yes or no, sir? Yes, this is called as risk of material misstatement due to fraud at FS level. Now, when you feel that the whole FS could be manipulated, when you feel that there is a risk of overall FS being manipulated. Sir, one more example of overall FS being manipulated. Let us say you are conducting audit of a startup entity and you have a doubt, you have huge doubt over the competence of the management to prepare the financial statements. So there is a possibility of overall financial statements, all right, being manipulated, or it could be completely wrong. So that is called as ROMM due to fraud at FS level, risk of material misstatement due to fraud at FS level. Now you are going to respond to that. In order to respond to it properly, now the answer is simple. You should ensure that you have you should have proper personnel in your audit team who are experienced. You should supervise them properly. Then specifically focus on accounting policies, because if management intends to manipulate the overall financial statements, they will for sure manipulate the overall accounting policies. All right. And then please ensure that you have some unpredictability in your audit procedures, because when you try to give some surprises, you know, there is a high possibility that you may end up detecting fraud. So for overall responses at FS level, ROMM due to fraud at FS level, I just made you feel what kind of case study they can ask. Then in that case, please write POW. All right. Now, ROMM due to fraud at assertion level, responses at assertion level. Now this is very simple. Listen to me. They may give you any item, like for example inventory, there is a risk of misappropriation, and they will ask you to practically write it. Now I cannot prepare you for that. You have to use your common sense. Like if there is a risk of misappropriation in case of inventory, then you will have to go for multiple times the physical verification, checks, stock statements, stock registers. All right. So look at this. The only thing I can make you write is only one line, that nature, timing and extent of procedure should be responsive to the assessed risk. And then if you see, then they have given example. Now that can be any example over there. All right. But the most sensitive point in further audit procedures is this one. Let us say that you are conducting audit of an entity which is co-founded by legendary Ratan Tata, legendary Narayan Murthy, legendary Sudha Murthy. These 3 legends have come together and they have founded a particular entity named as, let us say, X entity. Okay. Now, when you look at these legendary people, you don't feel like there is a risk of fraud and management may manipulate the controls. But still, even in such entity, irrespective of whatever risk you have assessed, you must always think that there is a possibility. I'm not saying that management will do it, but there is a possibility of management override of controls. and you will compulsorily perform these procedures. Let me be very clear with this. Irrespective of the assessed ROMM, this can be your MCQ, irrespective of the assessed ROMM, you will respond to the risk of management override of controls. When they say irrespective of the assessed ROMM, means whatever is written over here, you must perform these procedures. You must perform these procedures. Alright. And the code word is JO. So J for journal entry testing, where you will test the journal entries, whether they are appropriate, whether they are passed by proper persons, whether there was some unusual activity in journal entries. E for estimates, whether the assumptions are reasonable, whether there is a possibility that management could be biased, alright, could be partial in case of estimates. And then O for outside the normal course of business. If there is a transaction outside the normal course of business, like manufacturing entity giving a loan or something like that, then you are expected to go through the logic of the transaction, whether it was required or not, the accounting part, the authorization part. So they are saying that compulsory, you must verify JO. J for journal entries, E for estimates, O for outside the normal course of business transactions, and then I filled it up a little bit so that you can write something over there. Alright, so responding to the risk of management override of controls is a compulsory procedure to be performed irrespective of your risk assessment, irrespective of the size, nature and complexity of the entity. Alright, then as an auditor, you are expected to evaluate audit evidence. Whenever there is a misstatement, at least try to check once whether it is intentional, unintentional. Evaluate the results of analytical procedures. Alright. So whatever procedures you have performed in different essays, please try to evaluate whether there is a possibility of fraud over there. Alright. But that's fine, you don't have to by heart that point. First 3 points, especially the first point and the third point, can be asked as a separate examination question also. What kind of written representations you are going to take from the management? Very simple point. Everyone over here, when it comes to fraud, first of all, I want management to give it to me in writing that they acknowledge and they have fulfilled their responsibilities to prevent and detect fraud and error. Then wherever they felt that there is a possibility of fraud, they have disclosed it to me. Alright, they have disclosed ASA fraud to me. Which fraud? ASA. A for actual, S for suspected, A for LH. So, and wherever there was a possibility of fraud, they have disclosed those things to me. When you are write some written representation from the management, you have to become very possessive, look at this. So, management's responsibility is to implement internal control, management's assessment of the risk of fraud, whether there is any ASA fraud, actual, suspected or alleged fraud. Alright, I want management to give it to me in writing that they have disclosed these things to me. Now, communicating fraud. Let us say if you find a fraud which is of a very small amount, just 1,000 rupee fraud committed by some junior employee, and the turnover of the entity is into crores, and there is 1,000 rupee fraud which is committed by junior employee. Don't ignore it. If a junior employee has committed a clearly trivial means not at all important, clearly inconsequential, very small, minute. If a junior employee has clearly committed a clearly trivial fraud, at least communicate to that employee's manager. So communicate to appropriate level of management. If a junior employee has committed material fraud, then communicate with management and those charged with governance both. If a senior employee has committed a fraud, maybe material, immaterial, whatever it is, please communicate it to management and those charged with governance. If management itself is involved in the fraud, then communicate with those charged with governance. If management and DCWG, both of them are involved, my God, then please try to get some legal advice what to do in this case. There is a possibility that you may have to communicate it to the regulatory authorities. You will communicate fraud to regulatory authorities only when the law and regulation has asked you to do so, because we cannot ourselves imagine and assume where to communicate. And the best example is Companies Act 2013, where section 143 subsection 12 of Companies Act clearly says that fraud of rupees 1 crore or more needs to be reported to the central government. Alright, so with regulatory authorities, I will communicate only if the law and regulation has specifically asked me to do so. Now, because we are discussing an essay related to fraud, so there is a big possibility of this discussion that there may be a case study where auditor wants to withdraw from the engagement. Boss, if auditor is unable to continue the engagement due to exceptional circumstances encountered, first of all, when do you think auditor can withdraw from the engagement? Let me say that there is a fraud. Let us say you are conducting audit of an entity whose turnover runs into thousands of crores, and there is a fraud of 5 lakh rupees only 5 lakh rupees fraud, and management is not ready to take corrective action. Can this be a valid reason for auditor's withdrawal? The answer is yes. Because it is not about the amount, it is about the attitude of the management. Listen to me. This is one of the listed example in the module, in the pronouncements. That if entity fails to take appropriate action, it can be material, immaterial fraud, that's a different thing. But if entity fails to take appropriate action which auditor believes is necessary, then auditor can withdraw from the engagement. If there is a significant risk of material and pervasive fraud, that means if auditor believes that overall financial statements could be fraudulent over here, then in that case also auditor can withdraw from the engagement. Alright. If auditor has significant doubt over the integrity of the management or competence of the management, significant doubt, then also you can withdraw from the engagement. So if you see in my notes, for exceptional circumstances encountered, I have put triple asterisk mark, and then I have elaborated it over here. Alright, these examples. So if auditor is unable to continue the engagement due to exceptional circumstances encountered, whenever you want to withdraw, the first thing is, think whether it is appropriate to withdraw. Do you really want to resign? Do you really want to break up? If you want to break up, then check whether it is legally permissible or not. Because if it is not legally permissible, then you may have to continue. If it is legally permissible also, then don't just break up abruptly. Please discuss the reasons of withdrawal with management and those charged with governance why you are resigning, and determine and fulfill your professional and legal responsibilities. For withdrawal, we had the points in Brahmastra Revision of quality control also. Whenever we talk about withdrawal, these are the same points that get repeated. Alright. So I don't think that should be an issue for you. So let me be very clear. When it comes to SA 240, as I told you initially in the module, they have done 1, 2, 3, 4, 5, 6 discussions, and I am done with all those 6 discussions over here. However, if you see, I have printed one more thing. Statutory reporting requirements to report fraud. Now, when we talk about fraud, you know that there is something called as CARO 2020. CARO 2020 is an additional reporting requirement. It is an annexure which is attached to the main audit report. In CARO 2020, there is a clause 11. In clause 11, they have clearly said that if there is any fraud, whether it is by the company, on the company, noticed or reported during the year, whether you have noticed it, whether someone else has noticed it. As an auditor, you came to know now that there is a fraud. As an auditor, you came to know now that there is a fraud by the company, on the company, all of that does not matter. Please write down the nature and amount involved. Then secondly, 143 subsection 12, duty to report fraud to the central government. Under 143.12, if you have reported a fraud to the central government, then those details are also required in CARO. And then at the end, CARO wants you to tell them that whether you have considered whistleblower complaints. What is whistleblower complaints? Where employees report the fraud to the audit committee without disclosing their identity. Alright. So secretly, when employees report a fraud to the audit committee, that is called as whistleblower. They just want you to report whether you have considered those whistleblower complaints or not. Alright. So 3 sub clauses in clause 11 of CARO 2020, which is a part of our audit report. However, when it comes to section 143 subsection 12 of Companies Act 2013, duty to report fraud to the central government, you have to be very careful. It is my humble request that you please go through this chart. You will automatically come to know what needs to be reported. But there are some major observations that I want to make. If you are an auditor of the company, during the course of performance of your duty as an auditor, if you have reason to believe that an offense of fraud is being or has been committed in the company by officers or employees, you can download bare section and also check. They have clearly written by officers or employees whose amount individually is 1 crore or more. Only then you are going to report the matter to the central government. What I want to say is that if the fraud has been committed by third party, that means employees or officers are not involved. Then in that case 143 subsection 12 is not applicable. 143 subsection 12 is not applicable. Although CARO is applicable even if the fraud is committed by third party. CARO to says that if you come to know any fraud, you please report. Alright. But 143 subsection 12 is worried only about fraud committed in the company by its officers and employees, where individually the amount is 1 crore or more, that you are supposed to report to the central government. Alright. If the amount is less than 1 crore, then this is the duty, not reporting to the central government, but at least you have to report to the board of directors and audit committee, and then they have to explain things in the board's report. Now, how to report to the central government, that I have explained over here. That is a very clerical thing. You can go through that, and if there is any doubt, you can please let me know. Alright. So that is your SA 240, auditor's responsibilities in relation to fraud in an audit of financial statements. Very sensitive essay. Please ensure that you are preparing this properly for case study based questions. Thank you so much.